Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, welcome back. Phil Tarrant, host of the Smart Property Investment Show for our special series Fast 50 2026, where to put your money today for the best capital growth in 2026. I don't know how many times I've said that. I've been told to keep saying it because that's what it's all about. It's a unique report where we collect and aggregate insights from experts right across Australia to give an independent view, which is data-driven but also sentiment-led, on where you should be deploying your dough to get your biggest bang for your buck in property investment. I'm one of those experts. Allegedly, they put me in there. Wouldn't claim to be an expert. Probably pretty good at talking to people about property. And that's the reason why I don't do this alone. Joining me back in the studio as we get into episode number 5 of this special series, where we're going to look at the rest of the suburbs. We've spoken about WA, we've spoken about Queensland, we've spoken about Victoria, which have dominated this year's ranking, but there is some properties that fall outside of that in other markets in Australia. Paul Glossop, Director, Pure Property Investment, back for episode 5. Paul, you enjoying this?
That's your best intro to date, Phil. You've gotten better with age.
You reckon?
Oh, it's marginal. It's a very
I
low,
practice at home.
very low bar.
I practice at home. I was watching some series the other day where some lady who was practicing to become a TV anchor set up her own studio in a house and practiced 2 times a day for 2 hours a day.
Did she become one?
To get there. I don't know. Maybe I should become a TV anchor. What do you reckon? Put it in the comments.
There's going to be a lot of Ron Burgundy
there could be
references.
Yeah,
there,
well,
no
man,
doubt.
one of the greats. One of the greats, Ron Burgundy. But maybe there is a career
The Human
for me.
Torch was denied a bank loan.
maybe there is hope for me yet as a TV anchor talking about property. Maybe I don't know. Maybe I missed out calling. I should have had a show on Sky back in the day.
You reckon?
Would have been running things.
You were on there a few times. So was I. I don't think we were ever on together.
Imagine that.
That would have been
obviously the producers.
See, that's what they would have. The punters would have much preferred.
That would have survived then.
You reckon?
Oh yeah, man. And Sky, mate, I'm here. I can
So
do
am
a
I,
property
actually.
show. We can do a property show for Sky.
Yeah, you probably wouldn't want to go to their studios anymore, though. You want them to set it up here. Lazy.
Go there. It's just around the corner.
Okay.
But, yeah, I reckon if that's what the punters want.
Shout out to our good friends at Sky. They're always good people.
Good stuff.
Yeah.
I watch Sky.
So do I.
It's
on in my office in the background. Always got the ASX ticker ticking over.
Yeah, I like some of the good stuff on it. What was it when there's one about when lefties go nuts or something or other? Have you seen that one?
No.
Can't remember what it's called. It's quite a conservative channel, as you all know. But yeah, we're ready. We're ready for our calling. Sky TV for proper property TV, where a couple of people, one's an idiot and the other one sort of knows what he's doing.
Nice one. The other one talks into his hairbrush, looking in the mirror.
It does. Practicing my introduction.
Waiting for his call up.
Practicing
for the first grade.
Well, I've been doing this for a few years now. I've been doing this for years.
You'd think you'd be a little bit better than
you would do, wouldn't you? You would do. And thankfully, I've had training for some of the greats. Ron Burgundy. And okay, that's all. I'm going to do that on the weekend. I'm just going to watch shows about anchormen.
Okay. Just flush out quotes. Left, right,
and then I can use it, start throwing it down. I think I was rapping in some earlier
you were
episode of
a bit of Vanilla Ice in there.
Vanilla
You
Ice.
did well there. That was good freestyle, but you're far better than I would have assumed. But
man, you give me a song, I'll freestyle property to it.
Okay,
anything as long as it's nothing to do with Diddy. He's a bit on the nose at the moment.
A little bit on.
He's got a big property portfolio allegedly. If you've been following that,
won't have it for much longer. I don't think. Might have some
billionaire. I don't
legal
think so
bills
now.
to pay for.
God, that sounds. It's everyone's gripped. It's not as popular as what's happening on the Fast 50. I know that's breaking the internet. The downloads we were getting on this, but interesting reading nonetheless. Now, Paul, we've spoken about WA.
Yep.
We've spoken about Queensland, which we expected to be in a report. Queensland, if I was going to look at some themes, Queensland more regional than metropolitan.
Yep.
And so a bit of a shifting sand. It's always represented well for the last 3 years of this report. We spoke about Western Australia, and we've got some views and observations around it. I think, is it really the best place to be putting your dough for accelerated capital growth
Some
right
people
now?
think so.
Some people think so. Some people say that. But what we did in the last episode, and I think it was very sage, is that we actually looked at those 3 markets, including Victoria, with a view towards the average annual growth. And despite the doldrums that people would think that Victoria is facing, it's annual average growth, which is over the last 10 years, is consistent with, I believe, Queensland and outperforming of Western Australia.
Outperform both, to be fair. I think it was 6.52 versus 6.3 versus
one was
5.6.
So you
So
can...
it's better.
Yeah, so even though those suburbs have been, those areas, Queensland and the suburbs we spoke about and WA have been firing,
Yep.
Over a period of 10 years, it's sort of same-ish as what's been going on in Victoria. So the mail was Victoria has performed at average levels, reasonable, particularly the suburbs we've spoken about, probably outperformed averages over the last 10 years.
Yeah.
But your timing, when you look at some of the numbers, a lot of negative territory still in Victoria may indicate that is the place to put your dough for accelerated growth. But there is other parts of Australia. Australia is a big place, as we know. There are some other states and territories, ACT, New South Wales, South Australia, Tasmania, which all made the list, albeit at a much more truncated level. So we wanted to go through some of them today. Now, will there be a time, Paul, and here we go, get your crystal ball out and start gazing. Will there be a time when you get 12 or 15 New South Wales-based suburbs in the Fast 50? And no doubt you will say yes. So what I would say to that is that when would we expect to see that? Is New South Wales now not going to be delivering these highs of rapid growth that you're going to be getting, or we have been getting in these other suburbs, these other locations?
I'm not convinced it's going to happen anytime in the next few years, put it that way. The reason being ultimately is it hasn't been a terrible market. I mean, if you invested well, when I say a terrible market, it's actually been really quite widespread as far as the performance of New South Wales and the consistent, decent performance of New South Wales. It's had almost all markets in Sydney are still below their September 2022 peak, if my memory doesn't recall correctly. Actually, sorry, I take that back. It's 24 peak. They went backwards and they sort of saw a bit more of a resurgence, but they've actually only really just come back to their peak. So Sydney's sitting at about peak now as far as peak prices. Almost every other market in Australia is also sitting at about peak except for Hobart and Canberra and Melbourne. So if you start to look at nationally which markets are of value, you're paying more than you ever have in Sydney, and that pretty much goes for every single coastal market and every single major regional hub in New South Wales. You're paying more now than you have ever paid for that equivalent property in the history of life.
And that's going to be Sydney for you. I was speaking to someone the other day.
Surprise.
But surprise, I know a lot of people around property.
Just ask him.
And, yeah. I should do it.
Kind of a big deal.
Kind of just a little bit, not that much and that, but, enough.
Yeah.
Enough for people to stop me in the street and just thank me.
Right.
Thank me going, you've changed my life, mate. That's great. Yeah,
God.
You've done a great job. And I go, yeah. Cool.
Nice one. Can you buy me a Chico roll?
Mate, I tell you want an hour of my time? That's an easy way to get a long neck and a Chico roll on a park
milk
bench.
Crate.
Mate, happy days. Happy days. Oh, by the way, I do appreciate the feedback when I do get it. I get a real kick out of it. It's quite nice. And we'll continue to do it because we can do it. It's a good thing to do. And it's one of the reasons why we do the Fast 50 report, because there's not many places in Australia you can go to that. And I'd say it again without fear or favour or bias or agenda, to actually help property investors make decisions and help cultivate those decisions to create wealth through property. I'm not saying property is the only asset class. It's an asset class that I choose as my primary vehicle. I have one of my primary vehicles for wealth creation. Paul would say the same, but there is also some other very good
antique cars.
Antique cars is another one.
Livestock.
You're
into that game.
I'm in the livestock. I've got a lot of fingers in a lot of pies.
Diversification. Look at you.
Mate, I had the first crop of mandarins the other day.
Oh, bumper season.
I got one. Sweet.
Did your donkey eat it?
No. No, actually, it was really tasty. It was seedless.
It'd want to be. How much that cost you?
Oh, no, the
few
orchard.
Grand.
Yeah. Don't worry, the orchard's coming on well, but it's very diversified. Very diversified. But the point being, there's a lot of other asset classes. So, this is, some would say, focused towards property investment. I would say when it comes to making investments around property or anything else, make sure you speak to your advisors, trusted advisors that you pay money for, not that they provide you free advice and get some kickback somewhere. So particularly with asset selection, your financial planner, absolutely, your accountant, your buyer's agent, your mortgage broker, the interconnected suite of professionals that you need to have as part of your A team to help make informed decisions. So, but yeah, I was chatting with someone that they would fall into that bucket, and they're going, "Yeah, Phil, mate, it's sort of southwest Sydney.
Well,
That's good." That Trent from Punchy.
No, that was
Trent from Punchy.
That's the cabbie from the 12th Man that I was trying to impersonate.
I was thinking about Trent. Does anyone remember Trent from Punchy? Remember Trent from Punchy?
I think a few people would know Trent from Punchy. I actually might know who you're talking about here, and the reason why, and I might be way off, but he be a buyer's agent?
He or she may be a buyer's agent.
I shouldn't have assumed, but I think of the individual, hence why I went with the he.
Yeah.
And the reason why I know that is, and this goes back down to choosing some good professionals that you want to work with for a long period of time. I personally bought quite a bit of property in southwest Sydney, probably 13, 14 years ago was when I was getting a lot of exposure then. And I still do. I have all the property I still bought there with one property manager who was a terrific human being and a really good operator. And he only as of the last 2 or 3 months sold his business, sold his rent book and he was just doing property management, sold a few properties on the side, but just a property manager. Anyway, he also worked with this person I think you're speaking with. And he said, you wouldn't believe who came to my office the other day looking to buy anything from investors that I might have in my books looking to offload cheap. And he said the person's name, and I'm not going to say it on here because I don't want to give away his secret source because that might be his IP. But it raised my eyebrows, and I thought, wow, he's back. He's back in the action.
The biggest gossips in property are buyers agents. I'm happy to report, and I can rubber stamp guarantee that is the case. It's incestuous.
Absolutely.
They run around putting bananas in each other's exhaust pipes,
Mate,
gossiping.
It's a fantastic fraternity, I actually think, and I think we've
like
been...
a pack of seagulls, you throw a chip out.
Absolutely.
No, we like buyers agents here, but it gives sense. Like, but to preface that, this person said it's got to be very specific for the right type of person. But but anyway, there's a couple of New South Wales properties in the Fast 50. Dapto. Love Dapto. Dapto's a great space.
Spent a few times around the dish lickers there.
Dapto
Fantastic
dogs.
place.
Yeah,
Different place though, I tell you what. If anyone from Sydney who's based in here, or has anyone been down the Illawarra Wollongong and has a certain probably mindset as to what Dapto was and what it's becoming, that whole basin is undergoing a massive transformation. And when I say massive transformation, the Princess Highway, which basically goes down and dissects more or less all the way down to the south coast towards Bateman's Bay, has had a bypass that completely bypasses that whole area around Albion Park. But now, because that's bypassed, they've released all of the land that essentially sits behind out towards the hills, out towards Robertson and up towards Kangaroo Valley. That's all been rezoned in the last 10 years. So what you go and see now, if you look west towards those ranges, is you actually see redevelopment.
Suburbs.
It's all turned into low density residential, where previously that was just farmland. So what's happened with that is it is similar to the southwest Sydney, where you've got a big rejuvenation and you've got new centres and new hubs that are actually being created out of that. Now, this is also a really interesting thing though, because those things, when you get these brand new developments in established areas, which that is a classic example, the new developments always sell for more. And what it does immediately is it'll skew prices on paper. So I always try to caution anyone who says, look at this place, and Southwest Sydney's got plenty of them because there's plenty of new land subdivisions that show huge prices, and all of a sudden it skews postcode growth. So just be cautious when you look at suburbs and think, well, it showed on paper
numbers.
15% growth, 20% growth. Go and actually have a look at what's actually influencing those numbers, because if you compare like for like, you might be surprised to see that there's actually been no growth, in some cases negative growth. So that's a really interesting case. Not to say that Dapto is a bad place or good place, but it's just an interesting case study.
Well, 0.6% median quarterly, 8.2% average annual. So over 10 years. It's been growing well.
It's been a great place. I got property out that way.
And 12-month is just over 8% as well. Yep. So the yield though, 3.9%, $600. So
soft.
It's you're gonna have to carry some holding costs if you're investing in there. Look, if you've got a more mature portfolio, lower LVR, it's going to be a very different story. Another New South Wales property, and this has been an untapped best kept secret around, but it's not anymore. Long Jetty.
Oh, you reckon?
Long
that's
Jetty on the
secret?
central. Yeah, it's smart people I know have been buying there
Really?
for years. Medium price, $1.3 million now, the Jetty.
Who'd have thunk it?
God,
At the Jetty.
10 years ago, you're in there for, a lot less.
A long neck and a pie.
Yeah, mate. I don't know if you've been through there recently. I went
No, I haven't, to be fair. You spend a lot more time in that area than I do.
Yeah, up towards driving through there up towards the entrance.
Yep.
Mate, it's like transformed. There's like, there's cocktail bars and
and it was
it's very sort of,
it was ripe for it, right?
Yeah.
Like it was a matter of time before the Terrigals and the all those sort of those evokers of the world. They were always a bit more upmarket, but they kind of got way beyond affordable about 5-8 years ago for almost everyone. And it just happens that people just keep looking for the next coastal opportunity, and it just kept picking off towns further up north.
Long Jetty, it's on the lake. However, the beaches like Shelley Beach and
it's just
Dapto
there.
Bay, and it's all there. Swoon Bay, the entrance is all there. So there's good reason why, and a lot of families, I believe, will be drawn to this as well, because it's a very livable sort of area. All the amenities are there. It's becoming very gentrified. When you start seeing dog groomers popping up all over the joint, things are changing, right? Even the old roller skating discos being sort of, vamped up. So, Long Jetty, 83 sold, 1.8% median quarterly, 11% average annual growth. So that's just
Massive.
performing, right? 12-month growth is 14.8. So some, again, that should be steady as she goes, but very livable, and there's a lot of people being attracted up there. So they're the two New South Wales locations. Two in South Australia, Paul, Davoren Park, 491, $491,000, and Happy Valley. Another
Trotters.
It's a Dapto, Happy Valley. Seem to be some trends there.
There is some trends.
Some trends there. $773,000, 186 property sold, 4.5% quarterly, 8.2% of average annual. If you're getting that, you're happy, right? And
if you get anything above 5 and 6 as average annual over 10 years, you're going to be hitting some great numbers over 10 year time.
12 months. So both of those, so 8.2% for Happy Valley and 11.9% for average annual growth for Davoren Park. That's the story of Adelaide, though.
It has been, and it's been a fantastic
and people
performer.
just keeps
it
delivering, right?
You will
And back to Sky.
Yeah.
I remember Margaret Lomas.
Yes.
Used to just rave about South Australia, the Onkaparinga.
Yes.
Right? That's like
that was
Christie's Beach, and I can't remember some of the other suburbs that she was always like,
I've bought plenty of property in Christie's Beach area. Yep.
Steady, sustainable, predictable growth. And Margaret, who's still doing a lot in property, we should get her on the show at some point, was always the advocate of don't chase the outliers, chase the fundamentals, chase the stuff that's going to continue to deliver you over time. And if you, 10 years ago, when she was
20
hosting
years
Sky,
ago.
20 years ago hosting Sky, if you were investing in South Australia, particularly those areas around in and around Adelaide, you're probably done all right.
And look, Margaret's she's got a reputation for a reason.
Yeah.
Is that she's been doing what she's been doing for a long time. She's a very wealthy person because of the investment she's made personally and how she's had a philosophy of property investing long term as well. And it's been tried, trusted, line and length. Like she has never been one to advocate for things that are going to be out of the box. Her and the property professor, who is also based,
Peter Collins,
who anyone who's sort of been following property and property information for a long period of time, you would have seen Peter's name associated with so many different reports, and he's only really recently taking a backward step from his teachings and all the rest of the stuff there, but he's been an advocate for Adelaide for an awfully long period of time, someone who's actually a good case study, who's someone who's only ever put their money in Adelaide. You ask him, he's only invested in Adelaide personally. Now, he's advocated for a lot of markets across Australia, but he's one of those classics, I'll invest where I can control. He's done a few developments and whatnot, but he'd be the first to say that it's not a market that's always gone up. It's certainly had some sideways times. And when I say sideways, similar to what Melbourne's done over the last 5-6 years. And he's a classic example. If you speak to him, and if anyone goes and follows any of his content, and he's put out plenty of content over the decades, he is the first to say that I'm not buying for a short-term sugar hit. And he buys because he knows that fundamentally things will consistently perform the way I expect they will perform, and I'm comfortable with what will be a 6, 7, 8% average annual return. And that is what I think extremely good property investing always reverts back to, is that don't chase things which you want to be the outlier or things you don't understand. If you understand it, you're comfortable with it, do it and buy it, but be prepared to go to bed with it for 10 years.
Yeah, and another professional who would have a very similar approach, I would say to Peter, would be Terry Ryder from Hotspotting, and well regarded as a property analyst for many decades. And I'm happy, I'm sure he won't mind, but he's some of the people who have recommended those two places in South Australia, right? And that would be based on the mechanics of those.
Absolutely.
Very mechanical investing. It's not a buyer's agent. So that's why I'm happy to disclose that he's actually connected with that. And that will be through the science and the data.
Yeah.
It would be how we make a decision making. So, mate, if you get 11, 8% average annual growth for 10, how long does it take to double if you're growing it on average at 10% a year, right?
10% is 7 years.
Yeah.
So you're doubling in 7 years at 10%. 8% you're doubling in circa 9, 10 years. Even at circa 5.5, 6% you're doubling in 13, 14 years. It doesn't take long.
It doesn't take long.
It doesn't take long.
So get your calculator out, your capital growth calculator, compounding growth calculator. Was it Money Smart?
moneysmart.gov.au. You can grab it there.
And it'll give you a sense for it all. And what the key takeaway will be by doing that is, for all the reasons, and if you go back to episode 1 of our special series, all the reasons why you probably haven't been investing, just think about how much time you've lost by not actually being in the market, getting that compounding average annual growth in good markets. It's a preface. That's the reason why you need reports like the Fast 50 to help you out with that. Now, 2 suburbs in the ACT, the Australian Capital Territory, Latham, which is 2615 postcode, 790 grand will get you into the market there at a medium price, and Gungahlin. Gungahlin, I don't even know what that is.
Just on the outskirts there.
Me peepers aren't that good. It's a small little spreadsheet.
Yep.
So sorry, residents of Gungahlin.
Newer suburb. Actually a newish location, full stop.
Yeah. 925.
Fun fact, I bought a Domino's in Gungahlin for a client.
Like a pizza?
Yes, a commercial premise there.
Did you?
Yeah, probably about 3 years ago now. I think it was doing about 7.2% net then. It's gone absolutely bonkers.
Really?
Yeah, a good 10+10 lease on that one. That was a banger.
The Domino's. ASX listed. Everyone loves the pizza.
Everyone loves the pizza. Consistent.
What's the cap rate on that?
It was 7.2. 7.2. At the
massive.
time of buying it, with 10+10. It was brand new, mate. It was a time when we went, it was probably about halfway through the interest rate hike cycle. And it was one of those moments where everyone paused. All those fancy, really cheap, amazing loans sort of all of a sudden got paused overnight. It was someone who had just a good wedge of cash. They weren't doing a lease stock. They just wanted a good, consistent place. And this place, it was brand new. So it was brand new with a brand new operator. So there was a few risks with it.
Yeah.
But brand new centre, brand new operator.
Franchise,
yeah, exactly.
Okay.
So there was risks, right? But with that comes, you have to invest in those types of franchises. You have to put money in line. You have to pay for fit out. So you'd think there's a bit of viability, and it's not a new brand.
No. And look, pizza. They sent us a time to. I think you did your shift as a pizza man.
I did 4
years.
I've done a few Pizza Haven back in the day, and Pizza Haven and Pizza Hut. I was Pizza Hut. I was Pizza Hut. I was cutting and delivering.
Yeah, mate. That's where you learn.
You do. You learn your preferences towards how much meat is too much.
I reckon, and I never got appreciated for. I pioneered that mid crust pizza.
Mid crust.
Well, you know how you had thick or thin.
Yeah.
And then they brought out that one which was I reckon that was pioneered at our shop.
Really?
Yeah, because what we used to do was make a special dough,
right.
Only proof it halfway.
Ah.
So and then we'd put barbecue sauce and chicken. I reckon they stole some idea. Pizza Hut.
They're not doing so well anymore.
I don't know.
Going back to a theme though, Phil, I did want to touch on this though, because we talked about knowing where your numbers are in average annual returns. We spoke about it on the Pure Property Investment Show, maybe last episode, that we've actually been building a tool that is going to allow people to plan this stuff out properly. And I'm not going to go through that necessarily right now, but what I do want to do is give a shout out to anyone who's listening to say, if you are sitting there and you're one of those people who may have a property, may have 5 properties, maybe thinking about buying your first property, but are unsure as to what the journey will look like in the end, what we're building and what we will be able to deliver you as a tool is probably going to be the best piece of software you will have as a property investor. So if you want to be on the shortlist to get at the front of this queue to actually get that tool available to you, send an email to inquiry@purepropertyinvestment.com. Put you on the shortlist because we're going to be launching that probably in the next 3 to 5 weeks. So that's an inquiry with an E at purepropertyinvestment.com. I want people to get on that because I want people to be more educated and empowered to know where they're going to end up. When you accost them at a barbecue to saying, why are you buying property? Where are you going to be at retirement?
You can't help yourself, can you?
No, I can't.
Like,
because
you're
I
here to
want
speak
people to
about
have
the
this
Fast
information.
50,
That's all people have done. They've downloaded it. They're here to talk about it. But I want people to know where they'll be if they action
So what
this.
is it? You could.
It's the Pure Property Planner.
Okay.
That's what it's going to be.
It's got a name now.
It does. The Pure Property Planner is where it's going to be, and that's what's going to allow people to give them a sense of where and what they're going to be at the point where they're going to stop working and start taking the advantage of what they've done over the years. Because you talked about taking action.
Got to take action.
I want people to know what taking action actually looks like and have a tool that gives them the ability to understand where it is.
Action taking and decision making.
So get on to inquiry at purepropertyinvestment.com, put your name on the list so you can actually get access to it.
There you go.
Just let them know you want to be in the queue for the Pure Property Planner.
So there's one other suburb that is outside of those core ones, Victoria, Queensland, and also Western Australia. Kingston in Greater Hobart, $750,000.
Bought a few properties in Kingston.
155 property sold. It's not bad going. Median quarterly 0.7, average annual 7.5, 12-month growth 1.4. So ain't been doing much the last 12 months, but has performed pretty well over an average 10 years. So some clues there again, only 4% yield. So
I'll give an anecdotal one for Kingston, Philip. You'll know this person. He is a landscape architect, friend of both of ours.
Yes.
I bought him a property in Kingston, believe it or
did you?
not, in 2017.
Okay.
We paid $300,000 on the button for that property.
Mm.
He sold that property this year for $642,000.
Double.
More than double. But I guess the point is that he's also bought property across other markets, predominantly in Brisbane, that we've worked on with him, which he still holds. But hint, that market did really, really, really well on those numbers. The time was probably that we advised to get out because he wants to recycle some of that. He's at his borrowing capacity, looking to buy a home in the Sydney market, needs cash. Now made a decision to say that's probably the best place to take some of those profits because the market's done well. Is he going to do that again over the next 5, 8, 10 years?
How was his tax planning? Good?
It wasn't bad, actually. He chose to take a sabbatical and in that time sell. So his tax position was much less CGT in that year. It's all about the plan.
Complicated.
But it is. But there was a plan behind it, put it that way.
Planning. That's why you need a pure property plan, no doubt.
You do.
You missed your chance. You could have given another one. Lucky I'm looking after you.
Thank you.
Luckily,
Thank you very
I
much.
had to do is sort them out. But all right, so that's episode number 5. We're going to come back. We've got one more episode as part of our special series on the Fast 50. You can go and download the report, smartpropertyinvestment.com.au. We're just giving some colour to it. There's a whole bunch of other stuff. There's stories every day. Go and check it out. And we're going to do a recap also in a few months' time once we get all the questions coming in. You can ask those questions also, anything to do with the report. But if you've got specific questions, don't ask me because I'm going to go, I don't even know where Gungahlin is. Speak to the team over at Pure Property Best. And they could probably help you out a lot more. They're informed and educated and know what they're doing. Unlike myself. So remember to check out smartpropertyinvestment.com.au. You can download the report there. Please keep the reviews coming. And remember also, if you are tuning into this in your car, listening to a podcast, this is all available on the video. And I'm going to look like an idiot for those people who are watching this on the video, but you can actually come and watch us go through this. There's computers, there's spreadsheets, there's big, thick books of Fast 50s as we try and unpack this, and you'll see that this is not scripted by any means. It's just a couple of guys looking at the data, giving their interpretation of thoughts around it, and it's a very good way to go about doing it because we can give you those immediate insights and we can run off each other, actually understand how we see the world. So go and tune in. You can find us YouTube and all over the other places. Just look for smartpropertyinvestment.com.au. We'll see you for the final installment of the Fast 50 in just a moment. Thanks for tuning in. We'll see you again next time. Until then, bye-bye.